So you just arrived in the UK and that relocation bonus just hit your account. Congratulations. Now you're thinking, wait first, what's the smart thing to do with this money, Seth? How do they even invest in this country? Don't worry, I've got you covered. In this video, I'll be teaming up with an AI genius to create a unique £50,000 investment plan specifically tailored for people like you. I'll walk through every step and break down the reason for every choice and every decision so you can feel confident enough to craft your own investment plan all by yourself, even if you've never invested a penny in your life. And guess what? The AI has a few surprising recommendations as well. But before we continue, allow me to introduce myself.
Allow me to reintroduce to you Mr.
My name is Modupe, and I am not a financial advisor. Yes, you heard me right. I'm not a financial advisor. I'm not an investment advisor. What I am is someone who, just like you, relocated to the UK recently and has had to learn the ropes around personal finance. What I had that did help me was over 10 years experience investing outside the UK, combined with lots of research, conversations with actual investment advisors and financial advisors, and the things I've learned since are the things I'd like to share on this channel. However, please remember, nothing in this video should be taken as financial advice. If you do need financial advice, please consult the services of a licensed professional. Now, let's go catch up with our AI. So today we're getting two AI platforms, two for the price of one.
Two for the price of one.
So I'll be running this exercise with Google's Gemini. I'm using the 2.0 Flash Thinking experimental version because it apparently uses advanced reasoning. I've tried the deep research before. It basically reads like an encyclopedia, so no, it's not ideal for chats. So let's talk to Gemini. So what's the question we'll be asking Gemini? The first thing you need to do when you're dealing with AI is give it some context before you give it a question. You should check out my short about prompt engineering. Assume you are a highly experienced financial advisor. Should I give it a specialty? Specializing in helping individuals who have recently relocated to the UK and are new to the UK investment landscape. Your goal is to ask me the right questions in order to have enough information to create. So the thing about investments is it's very easy, but it varies from person to person. If you watch one of my videos where I talked about the fact that the first thing you need to understand is someone's time frame. Beyond the time frame, you also need to understand other things like the person's goals. For instance, what if the person you're talking to has no intention of staying in the UK for long, and you now tell them to go and put their money in pension that they can't get until maybe 50 something. So you need to understand each individual's personal goals for you to be able to properly suggest investment ideas for them. Again, this is not investment advice. I'm just tinkering with AI here to create a suitable investment plan. Assuming I have a lump sum of £50,000 to invest. That's by asking a series of key questions, or just asking me a series of the right questions to understand my time frame, my investment. So I'm coaching this guy now. Investment time frame, risk appetite, because these are things you need to understand. And should I see if it comes up with time frame by itself, or if I just leave it? Do you want to test the AI? Okay, these are the questions I would ask. Risk appetite, current circumstances, and personal/financial goals. That's goal-relevant questions required to come up with the ideal investment plan for my 50K. And then, based on the answers, create a diversified investment plan. Suggest percentages to be allocated to each asset class and compare this plan with common mistakes that let's leave that for now. I was going to ask you to compare with what the average person would do, but let's see what it comes up with before we start, to even see whether it itself does not make the mistake. Alright, located to each class and summarize. So let's see how good. So the user wants me to create, you need to know the investment time frame, you need to know the risk appetite. I already told it to ask those questions. Yeah. Do they have any debts? Are they saving retirement planning? Good questions. Okay, welcome to the UK. I understand you have £50,000 to invest, which is a great starting point. To create the most suitable investment plan for you, I need to gather some information about your current situation and future goals. Please answer the following. What is my overall investment time frame? My investment time frame is 6 years. Just long enough. Do you have any specific financial goals in mind for this investment? I don't know. My objective is early retirement and relocation back to my home country. On a scale of 1 to 10, how would you describe your risk tolerance? Are you comfortable with the possibility of market? I am comfortable with risk and market fluctuations.
I walk on the wild side.
So long as I have an emergency cushion to fall back on in market downturns. Have you had any investments? So let me number my answers to help this AI. Gemini is not doing bad, cha. First time I did this thing, it didn't give me very good answers, but probably because I am helping it with the kind of prompts as well. So that's the thing about AI. Your answers, the value of your answers depend on the quality of the prompts, right? If you give it enough prompting, enough nudging in the right direction, it will give you very good answers. I'm comfortable with risk and market fluctuations so long as I have an emergency cushion to fall back on. I'm not giving you a number. Figure it out. So I don't know what numbers have to do with anything. Do you prefer more stable? Have you had any investment experience? I have little investment. Let's say. What is your current age? Why do you want to know my age? Leave me alone. I'm fully employed now. Don't be asking silly questions. These are good questions though. Any outstanding debts, current income, you don't need to know this. You don't need all these ones. Let's assume I have investments. This person has investments in their home country. Do you have any outstanding debts? No debts. What are your primary financial goals? I told you, retirement. I wanted it to ask a question that it has not asked. What's my marital status? But I'm not going to give it that yet because that could actually lean towards a different outcome. I'm not familiar with investment. That's why we are coming to you, duh. So it says, here's a potential understanding your needs, medium-term growth. Your 6-year time frame requires a focus on growth to potentially achieve your retirement goals. Comfortable with risk, allows for a higher allocation to asset classes with greater growth potential. Emergency funds, I've already hinted you in the right direction. Anyway, it's prudent to keep a portion of your funds in really accessible, low-risk assets for unexpected needs and to provide peace of mind during market downturns. A lack of UK investment knowledge, I would suggest common and easily accessible. What is this? I said give me a table, you gave me this rubbish. So equity is 60%, yes. Yeah, joker, 20% of my investments in UK equities. Okay, so after getting all that information, this can give me a very silly, add bonds 30%. Guilt, please, this is rubbish. What's all this? Cash 10%. What kind of, yes, so where do I put all these things? You've told me nothing. So I should have said, I also need to maximize tax opportunities. See, that's the thing with the AI. You can't just ask it a question and to give you an answer. You have to keep going back and forth. No matter how smart it is. The two smartest ones I know, Grok, okay, let me say Grok, DeepSeek, and maybe Gemini. So those are the three, my top 3 in general. But still, you still end up having to do back and forth with these guys. Choose an investment platform. Fees, investment options, ease of use. Okay, now you're talking. Okay, so I put 20,000 in an ISA. Okay, so pick a platform, open an ISA with that platform, put your, yes, I can't put all the 50k in the ISA. 20k allowance, so you can't put it, if you want to, you need to utilize your allowance over multiple years. You can put 20k now, so this is smart. You can put 20k now because today is 16th of March, before April, right? Before April the 5th, and then put another 20k and then you have 10k. Oh, come on. I'm not going to wait a whole 365 days. Select your investments, exchange trading funds. FTSE 100. Dude, I cannot put 20% of my assets in FTSE 100. That's not wise. Developed world, VEV, yes, that makes sense, but not 30%. You want to put more. I don't like these allocations. Emerging markets, 10%, okay, maybe. Bonds, 30%, no. So the reason I don't do bonds is because bonds are the investment equivalent of emergency funds, but they don't have the ease of access that emergency funds have. So why exactly am I keeping cash that I can't access easily? The only reason people do it is in case of a market downturn. But in case of a market downturn, you don't sell during a market downturn. That's the silliest thing to do, in my humble opinion. So if I'm not going to sell my assets in a market downturn and I'm going to wait it out, and the market will definitely recover, whether it takes a year, 2 years, 10 years, the market recovers. Why did I waste that opportunity for growth by leaving the money stuck in bonds? So this is how I think about it. I have my emergency funds, which this silly guy hasn't talked about. I have my emergency funds, right? That I keep as a backup. So whatever happens, I know I'll be able to survive it. If I lose my job during a recession, you have emergency funds that can last you long enough to get a new job or long enough to get a business started. So that's the whole idea of an emergency fund. So bottom line is, I'm not loving bonds. Now you're talking. That's why I told it I had a wife. That's why I told, and it caught on. Gemini caught on. That's why I told it I had a wife. My wife. So, smart guy, you can utilize your full ISA allowance, but if your wife is a housewife and she is not working, she's not earning money, or she doesn't have money to invest, doesn't have to be a wife, could be partner. Because I know couples that it's the wife that is actually working and the husband is the partner that came along. So depending on who has the 50K and who is supporting, maybe the other partner is in university or doing the master's program or whatever, and then one other partner is working and just got a bonus or something. Each individual has their own ISA allowance, right? Each person has a 20K ISA allowance. So you could use your own 20K ISA allowance. If you have 50K to invest, you put 20K in your own ISA allowance. You use another 20K for your wife's ISA allowance. So you effectively invested 40K in ISAs. That way you maximize your tax benefits from that 50K, and you now have only 10K left. That 10K, you can put it in a high interest savings account, and that's your emergency fund. Now that 20K or 40K that you have in ISA, there's still different ways you can split it. For instance, Trading 212 offers cash ISAs with very interesting rates. You could take part of that and use it as emergency funds. Or if you want to be like me and you just trust the stock market, you could take the chunk of it and buy ETFs. Right? It's still within an ISA. That ISA is a tax wrapper basically. So whatever you make from it, you're not paying taxes on that investment. Or let's just assume you've already paid it. It's already been paid before the money went in it. Anyway, so the 50K is net. You've already paid taxes on it, but you're not paying any taxes on the interest or the returns or the capital growth that you get from that investment. So you now still have 10K that is outside an ISA. You can either do a high interest savings account, or if you've already used part of that 40K for a cash ISA, you can use the 10K for a general investment account. The only difference between a general investment account and an ISA is, I believe that it's an individual savings account. I keep calling it an investment savings account, but it's an individual savings account. The difference between the two is whatever you make from your investments that is inside an ISA is tax-free. HMRC won't even ask you about it. You don't have to report it anywhere. That money is all yours. But if you make money from a general investment account, you need to declare whatever you make. So the allowances, right? So if it's dividends, you have dividend allowances. If you gain dividends from that general investment account, I think they just reduced the dividend allowance. It used to be about £2,000 before, but I think they dropped it to 500 now. And then if it's growth, if it exceeds a particular amount in terms of capital gains, you need to declare that as well to HMRC and pay taxes on it. So that's the only difference between investing via a general investment account or investing through an ISA. Yeah. What else? So this is better. Practical tips: start small and learn. Invest for the long term. Don't try to time the markets. Yeah, this is good. This is good. What other investment options aside a general investment account exist for the remaining pension contributions. I can't do a lifetime ISA anymore, dude, because I've already exhausted my 40k. I've already exhausted 2 ISA accounts, you know? So you're suggesting LISA and JISA. Now, a lifetime investment ISA is if I choose to buy a home, but I already told this guy that I plan to relocate in 6 years. So buying a home doesn't make sense if I'm planning to go back to my country in 6 years, right? Buying a home is a long-term investment, although some people will still do it, and then the plan is they will sell in those 6 years. The only problem with that is selling a house is not as quick as selling stocks, right? So you do not want to buy something or plan to sell something that doesn't move that quickly. Bottom line is property is not that quick to offload. The other thing, if you choose not to offload it and you say, okay, fine, I have property, I will keep it and be letting it out, you could get a property manager. So you could do property. But the main issue here is that this guy is asking me to use the additional 10k on top of my ISA. If I'm going to use a LISA, I have to take that money from within the total 20k allocation. So if both my wife and I decide, okay, we want to buy property, so I use 4k from my 20k ISA allowance, she uses 4k from hers, so that's 8k. The government gives both of us 1k each, so we've contributed 10k towards property purchase, right? If we do that for a couple of years, if we do it for 2 years, that's 20k already that you can use for down payment. If you do it for, say, 4 years, that's 40k. That 40k, you can use it to buy a nice property somewhere. But the only problem though is you have to remember that as at today, March 2025, you can't buy property that is more than, I believe, £450,000 with a LISA. So there are a number of restrictions when it comes to using a LISA, so it's a tricky one. I was looking through its thought process. Let's see what it actually tells me. So that's a good follow-up question. Once you have your wife have fully utilized your stocks and shares ISA allowances, the remaining 10k can be considered for pension contributions. Yes. So you can increase how much money you put in your pension. My issue with that is, again, I told this guy that I want to get these returns back in 6 years. I wouldn't be 55 or whatever the pension age is in 6 years. So that's not particularly ideal for me. Typically, you can access your age from 55. Consideration money is locked away. Okay, so it's actually considering this. I like this guy. Hey, Gemini, you're impressing me. So money in the pension is currently generally locked away until the minimum retirement age. If your early retirement plans are within the next 6 years and before this age, a pension might not be the most accessible option. Good. LISA. I can't use the LISA because I've already junior ISA. You can contribute premium bonds. I don't like this idea. It just feels like a scam to me. You notice in general, I don't like bonds. I've done them before and they never paid off. You'll be seeing the thing growing, but then you just realize you compare a bond fund with any, even FTSE 100. FTSE 257 will grow more than any bond fund. It's like having a savings account. It's even worse than a savings account because cash ISA with trading 212 will get you more than a bond fund on average. A general investment account in this particular situation might still be the ideal option. Let's see if you can come up with something interesting. What's this? Investment trust? No. Enterprise investment scheme. So this number 4 is what I was waiting for you to mention because it's something I also dabble into with very small money, limited funds, max £500 a year. Max. Sometimes it's less. There are platforms that allow you to search through startups, like very early startups, very early. Crowdcube. I'll leave a link in the description. So you can invest in them, and if you are lucky, they may be successful and actually grow. Invest Engine is one of such startups that I invested in. They are yet to pay me back my investments, but I see them doing well in the long term because now they are one of the investment companies that a lot of people would mention when you're talking investment companies in the UK. They just started like 3 years ago, but they're already competing with the likes of Vanguard. They've already introduced SIPs. They've already introduced other features. So I see them growing in the long term. So once they showed up on that platform, I jumped at it and put my money there. Another company, I think, if I'm not mistaken, Monzo, the bank, also started on that platform as a startup. But the beautiful thing about this is when you invest that £500 or whatever amount you put into that, the government gives you a 30% tax return if they are registered on this enterprise investment scheme. So I look for startups that are registered with them. So it's not a return on your money. But what it is, it reduces your risk. So you put in £500. I'm using £500 arbitrarily. You can put in £50 if you want. You put in £500, but the government gives you 30% back rebate on that, if I'm not mistaken. What it means is you've only invested £350. but the company gets £500. So you pay out £500, right? At the end of the tax year, when you're doing your tax assessment, you tell the government that I invested £500 in this startup company. Then the government gives you like £150 back, 30%. So they give you like 30% of that back. So effectively, your risk in that exercise is not £500. Your risk turns out to be £350, which is still a risk. But imagine the returns you get, because to the company, you've invested 500. In their own books, you've invested 500. So when they're paying you back whatever returns it is, and their returns are funny, because that investment gives you shares. So you could wait till the company goes public or is bought over by someone else, and then at whatever price they are bought over, you get your returns. Or if they go public, you can sell, and usually they will not sell at the same rate that you bought. They will sell higher. It's like people did with MTN in Nigeria. So that's one way to get back. But this is a long-term risky. When I say risky,
It's too risky.
9 out of 10 companies fail. 9 out of 10 startups, if not more, fail. And even the ones that succeed, they don't succeed in 5 years or 6 years. They succeed in like 10 years. To be fair, Monzo Trading 212, it didn't take them that long to start to declare profit and make money. But you can't bank on that. So you have to go in with your eyes open, but it's something I personally enjoy. It's a way for me to feel like I'm investing in startups in the UK and helping the UK economy while making money as well. Structured products, I don't know what all these things. Alternative investments, I don't do. Peer-to-peer lending, I don't do. It's already told me how to split the ISAs. Let's see if it will actually mention Invest Engine. Invest Engine is my favorite, as you would notice. So it mentioned Trading 212. It considered Trading 212 and did not recommend it, and it recommended this AJ Bell. Free trade is not free. I like to ask this question when I have an option in my mind for something, not just platforms. For any question I ask an AI and it doesn't give me that option, it gives me a bunch of other options. I like to ask this question. I'll suggest that option, then I ask it to compare and rank. So how does it compare with the platforms listed above? Considering my situation, how would you rank Jones? As far as I'm concerned, Invest Engine is the easiest one of all of them. See, here's a potential rank in Invest Engine. Number 1. Vanguard number 2. Trading 212. Please don't stop putting Trading 212 and free trade together. Free trade has limitations on what is free, and there are certain stocks you can't buy on the free platform, so it defeats the whole purpose. Trading 212 will allow you to do anything you like, buy anything you like, your portfolio, do whatever you like with it. But free trade doesn't. That's why I don't like it. Fidelity. I've heard good things about Fidelity. Okay, we'll come back to the allocation later. So here's what I want to do. I want to try out this same experiment with DeepSeek and see if DeepSeek gives me better answers or gets to the point faster. But I'm impressed with Gemini so far today. It was a lot better than the last time I tried this experiment with it. So as you might have noticed, this video is also a crash course in prompt engineering. When I want to compare responses from different AI platforms, I just copy the question from one. I might tweak it a bit, but there's no point typing the whole thing again. So look at all the questions I asked. It allows you to copy in most cases. It allows you to copy the answers, but it assumes you don't need to copy your questions. Or it doesn't want you to go and ask someone else. I'm asking someone else. I'm using DeepThink and search, so it lets it check everything. I'm using DeepThink, you just press DeepThink and search. That's the beautiful thing about DeepSeek. Unlike some platforms like Grok that you can only use either one or the other. You can't use both simultaneously. But why would I want to use one or the other? I want you to think hard about the question and I want to check all the possible resources. That's how a human being does. Don't let me get upset. But my point is, DeepSeek allows you to do both. I think ChatGPT too now started allowing you to do both. But Grok still restricts you. You're either doing regular Grok, which is typically good enough. Regular Grok is good enough, to be fair. Or you're doing DeepThink. You're doing deep search. So Grok calls its own deep search, which I don't see the point. And then there's think. Let's use DeepSeek. Let's see. It's thinking. So one thing about DeepSeek is after a while, it gives up. If you ask it complicated questions like this, it gives you very good answers. But after a while, it just tell you, you know what, I'm done with this. Stop asking me questions. It just tell you it's busy and it'll stop answering you for a few minutes. So if it does that, we'll pause and then we'll continue. Dude, you just assumed this guy just assumed the answers and gave the question answer already. Yes, let me give you my own answers. Because you've asked for time frame. Let me give you my own answers. 1. Investment time frame. is 6 years. Let's give it the same challenge. 2. If my portfolio dropped 20%, I would wait it out. I have some investment experience outside the UK. Current financial circumstances. Do you have an emergency fund? I don't have any emergency funds in place yet. Do you have I have no debts and income is stable for now. I like the way it's phrasing the questions, short and quick. What is the primary purpose of this? Again, early retirement. By the way, 50k will not get you early retirement. Let's just be clear. Definitely not with this my slow and steady wins the rich approach to investing. Still, let's see what it says. It contributes towards early retirement, so I can relocate back to my home country. So I keep saying this, relocate back to my home country, because it's something that I know that a lot of people that relocate, you see on Twitter, people say things like, bye-bye to Nigeria, they're never going back. But then when you actually talk with people, especially people that are relocated maybe because of work, they saw an opportunity, they moved because of work. A lot of them do not plan to stay here forever. If things get better back home, they will go back in a jiffy. And we've seen that trend happen before. It happened in the early 2000s. Actually, it happened in the late 2000s during Obasanjo's second term, when things started to improve, and then we had news all over the place about Africa rising and everything. So a lot of Nigerians actually went back home. A lot of people that are schooled here went back to Nigeria then, because they had faith, they had hope in the country. So I say all that to say, this is not an uncommon plan for immigrants to say, I'll come here, maybe wait long enough, but if things look better back home, I will go back. It's one of the challenges that Canada is facing right now. So they open their arms wide to the whole world, but they're finding out that a lot of people are not staying. But the reasons are different though for Canada. Part of the reasons is this wave of right-wing narratives where immigrants are facing a lot of negative energy from their hosts, and nobody wants to deal with that every day of their lives, especially when you have children. You don't want to feel like a second-rate person in society, right? A lot of immigrants that have moved to Canada are going back to their home countries, especially people from Asia where their countries are not doing poorly. Some of them are actually doing better than some Western countries. So you're like, you know what, I don't have to put up with this, and they're going back. Let's get back to DeepSeek. Primary goal, relocate back home. Are you aware of UK tax efficient? I am not aware of UK tax efficient accounts, but I am interested in tax efficient investments. I am tax resident in the UK. Let me say my wife and I. My wife and I are tax resident in the UK. I'm hinting it the same way I hinted the other guy. With my wife and child. I don't want to give it too much. Existing assets. Yes, I own assets in my home country. Alright, let's see. What else? Anybody with a good job that came here and got a 50k bonus has assets in their own country. Trust me, they didn't come here and start. Do you require regular income from this investment? That's a good question. I would love to earn regular income from the investment at some point. So what the question is asking here is, am I looking at something like dividend stocks or growth stocks? That's a very good question that Gemini didn't ask, because those are two different types of stocks portfolios. Growth stocks will grow, but their dividend rates are very low. Of course, you can always cash them out, you can always sell them and make some money. So some people say it doesn't matter. But dividend stocks don't grow as fast as growth stocks, but they pay you dividends. What they lack in terms of growth, they make up for by paying you steady and consistent dividends. And some of them pay significant dividends. Some dividend pays to stocks pay as high as 7%, which is basically the same growth rate you hope for from growth stocks. In a way, sort of, I'm going to give it a trick answer. I would love to earn regular income from investments at some point in the future, but my immediate focus right now is on long-term growth. Let's see if we can find a way, because those are the kind of things people want. When I retire, I want to be earning from my investments. But now I have a job, so I want my investment to grow. So let's see if DeepSeek can figure this out. Do you prioritize? I have no... See, ESG is a scam. But ESG is a scam as far as I'm concerned, because it's not me. Okay, let me not talk about it, but I have zero interest in all these ESG things, because if they do it properly, it shouldn't be investors that make that call. It should be the regulators that make that call of whether companies have ESG practices or not. It shouldn't be a competitive edge. If it is really that important, it shouldn't be a competitive edge that, oh, we have ESG, you don't. No, it shouldn't be a competitive edge, because really, you're not leveling the playing field. So some people don't do the ESG principles and then they get ahead by investing anyhow, destroying the climate and the environment. Some people do the ESG principles and then you expect investors to compensate for whatever they lose by not playing roughly or playing the game the way other guys are playing. That's unfair. It's like saying you have two companies. One company bribes everybody and gets ahead because they are bribing everybody. The other company doesn't bribe anybody, but that gap in performance that they don't get because they don't bribe people, investors should now pay for that gap. So investors should pay them more money because they are not getting ahead because they are not doing the wrong thing. No, everybody should do the right thing. Lay down the law, let everybody do the right thing. Then investors can now invest based off how these people perform in the same level playing field. That's my opinion on ESG. I will drop my mic at this stage. So I have no ethical preferences. I want my money to grow. With ESG, whatever, they don't grow as much as regular Kenny. Are my income or expenses parent? Do you hedge against currency? I don't know, man. I don't know what you mean by currency. I'm not hedging anything. Please just answer my question. Please answer yes. Because I was afraid it's just going to go, I give up. Because DeepSeek does that. DeepSeek gives you very good responses. But every now and then it will just be like, you know what, I'm done. And it will just quit on you and tell you server not available. So I use Gemini or Grok more frequently than I use DeepSeek. I hardly use ChatGPT because my view, it speaks very nicely, but it comes out when it comes to giving you good answers. You see the answers it's giving me. DeepSeek is it. So it's telling you straight up, 55% should be in global equities. This guy is mirroring my portfolio. Half of my portfolio is in global equities. The remaining half I now play with, oh, do I want to invest a bit more in emerging markets? Do I want to invest a bit more in S&P 500 or in S&P 500 tech stocks or in the NASDAQ 100 or in FTSE 100? Or, do I want to play with the remaining half in terms of how I allocate to just lean a bit more here, lean a bit more there? But half of it, steady. So this is a very good plan. We should have come to DeepSeek directly instead of that our initial foray with the Gemini. See, in 15 minutes, it's giving me good plans. So key adjustments to your plan is saying emergency fund. Before investing, before we even set anything, set aside 3 to 6 months of living expenses. This is what, if I just arrived in this country with 50k bonus, that's what I'll do. 3 to 6 months of living expenses. Let's assume my living expenses is what? Let's say 5,000 for a round figure so that we can do the math quickly. 15k after that 50k goes to emergency fund. But this guy is saying 10k. Okay, let's leave it at. To avoid dipping into investments during emergencies, this is a very good point. This first one is the best. Protect your portfolio from unexpected withdrawals and aligns with your stable but unsecured income. Now, tax efficiency. Use your 20k allowance immediately. This is how I think. So if I put 15k in emergency fund and I take 20k and put it in an ISA, consider a SIP pension. No, I'm not interested. I'm leaving it in 6 years according to this scenario. Pensions are locked until 55. So he's assuming I put 10k for emergency fund and 40k to invest. Let's assume me and my wife have 20k allowance. I'm doing 15k emergency funds. So that means I have 35k to invest. But let's assume my wife used 15k out of her ISA allowance and 20k out of mine.
Your wife!
This, my beautiful wife.
This is my non-existent wife that I keep talking about. If you have a partner, you can use the allowance. Global equity index funds. Yes. So he's playing with the 40k. 55% here, and then 15% for UK equity index. I wouldn't put up to 15% in UK, personally. Global bonds, again, I hate bonds. I'm not doing bonds. Dividend growth stocks, I'd rather put all that global bonds, that 20% in dividend growth stocks or ETFs. Why am I doing liquidity? I already have emergency funds. What's liquidity for? Tax strategy, ISA first, invest 20k in stocks and shares, sharp. They're saying 10k in general investment account and 10k to a SIP. Okay. But you didn't consider that I could use my wife's ISA allowance. But this is not a bad plan. It's a smart plan. Let me see, what else did I ask Gemini? Okay, here's what we'll do. To allocate 15k to the emergency fund, right? So he's saying I should just put everything inside stocks. This is not a bad approach, but I need it to be a bit more actionable. I already have a workplace pension, so I don't want. What other investment options? I'll come back to DeepSeek on this portfolio allocation, but let's discuss this. What other investment option can I consider? 15k and 20k to an ISA, right? I don't want a SIP. We have 15k left. So don't tell me to put everything in a general investment account. Give me options, man. Honestly, if I had to rank all these platforms, DeepSeek is good. Grok is also good. I'm not trying Grok today because I gave it some similar questions last night and it was giving me some silly answers. But DeepSeek is good, Grok is good, and Gemini. Those three are my top 3 favorites. Copilot, I found out that Copilot and ChatGPT are good when the question is something creative. Something like, oh, give me title ideas for these YouTube videos, for instance. Gemini will give me something very practical. Grok will give me something creative. Then Copilot will help me rank it nicely and fine-tune it to sound like me. So Grok, Copilot, they're good when it comes to creative stuff. But when it comes to analytical thinking like this, DeepSeek is number 1. The funny thing is DeepSeek is also good for creative stuff. The only issue I have with DeepSeek, honestly, is that it gives up every now and then. Like, it just dies. See, it started. Due to technical issues, the search service is temporarily unavailable. It's no longer searching now, it's just doing deep think. You do 15k emergency for 20k, you have 15k remaining. Yes, you've done the math. Emergency fund, 20k, yeah, remaining. New allocation ideas below. Global dividend. Why would I do dividend aristocrats when you've already said the 20k is doing that already? Fund. Why am I doing funds everywhere? Oh, so he's saying global equity and then mix everything. This guy is hell-bent on funds. This kind of mix, actually. So these are some other things that I invest in. Enterprise investment schemes, schemes, money, cryptocurrency, or... Okay, you already suggested a SIP, so it's not fair for me to come back and say pensions. How do they compare? How suitable are these for the investment plan and time frame? The next question I'm going to ask it, the next thing I'm going to ask it is to make this plan actionable by suggesting platforms. See, so that's actually a good point that he's thinking through. EIS is a good option, but not for someone that wants to leave the country in 6 years. You see that time frame? That time frame is always an important thing to consider. Always. It's thinking through. I love DeepSeek. See, DeepSeek makes me happy. It's thinking through it that 6 years, you will make money, but 6 years is too short. 6 years is too long for crypto. Oh, Benny. Now me and you. Stick to your core plan. Use them as satellite holdings. Prioritize liquidity. What's all this? Oh, okay, so he's saying that 15k I should split it across dividends. There's no point in a 15% cash. Cryptocurrency. EIS 1005. Guilt. I won't do guilt. See, I'm so against guilt because I did it when I first got to this country and it was just a waste of money. Price went down, never recovered. Not doing. Stick to your core plan. So 90%, then you can put experiment. This is actually good advice. Again, nothing here is investment advice, but this is a good suggestion. Put the bulk of your portfolio in stable stuff, stocks, shares. The ones we know, ETFs, global oil ETFs, bonds if you want. But all these crypto, EIS kind of things, leave them for fun things, just to experiment, which is what I do. And who knows, maybe you invest in the next Monzo, in the next trading 212, or in the next invest engine. Okay, make this plan more actionable by suggesting platforms, considering fees and ease of use. The trading 212 is number 1, invest engine is number 2, because invest engine is so sweet to use. First, my emergency fund, just like it suggested, then I'll max out my ISA. That's how I would spend 50k that I am not using.